Hey everyone, welcome back to Corporate Decoder. Today, Renaissance Capital Greenwich Funds Trust filed their N-CSR report, and I'm seeing some interesting portfolio moves and financial highlights. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is a semi-annual shareholder report. So it gives us a look at how two specific exchange, traded funds, Renaissance IPO ETF and Renaissance International IPO ETF, performed over the last 6 months. It is packed with details about what they invested in, how much these investments are costing, and their overall financial health. This report covers the period from the 1st of October 2025 to the 31st of March 2026. Think of it like a mid-year checkup for these investment funds. They are essentially tracking companies that have recently gone public, so their performance can be quite volatile, like a roller coaster. Let's start with the Renaissance International IPO ETF. This fund focuses on international companies that have recently had their initial public offering or IPO. For this fund, the cost of a hypothetical $10,000 investment over the last 6 months was about $40. This works out to 0.80% of that investment. It is important to remember this is an annualized figure, meaning if these costs continued for a full year, that would be the percentage. So for 6 months, it would be roughly half of that. As of the 31st of March 2026, the Renaissance International IPO ETF had total net assets of almost $8 million. That might sound like a lot, but for an investment fund, this is relatively small. The fund held 47 different investments in its portfolio, and the rate at which it bought and sold investments, known as the portfolio turnover rate, was 38%. This means a good chunk of its holdings were bought and sold during that period. Looking at what the fund invested in, the top 10 holdings show us where most of the money is. Galderma Group AG makes up the biggest piece at 10.9%, followed by Kioxia Holdings Corp. At 9.3%, other big names include JX Advanced Metals Corp. And contemporary Amperex Technology Company Limited. The fact that these are the top holdings means the fund's performance is heavily tied to how well these specific companies do. Geographically, the fund is weighted towards semiconductors and semiconductor equipment, making up 15.8% of its assets. Metals and mining and pharmaceuticals are also significant industries. This concentration means that if those specific industries face challenges, the fund will feel it more strongly. Now, let's switch gears to the Renaissance IPO ETF. This fund focuses on IPOs here in the United States. For the Renaissance IPO ETF, the cost of that same hypothetical $10,000 investment was a bit lower, just $28 over the 6-month period. This translates to 0.60%, also annualized. So for the 6 months, it was about 0.30%. This fund is significantly larger, with total net assets of over $117 million as of the 31st of March 2026. It holds 50 different investments, and its portfolio turnover rate was 37%. A slightly higher net asset value and a similar turnover rate suggest a more substantial operation compared to its international counterpart. The top 10 holdings for the US Focus Fund include Kenvue Incorporated at 10%, followed by CoreWeave Incorporated at 9.2%, and Arm Holdings PLC. These are all significant players, and their performance will greatly influence the fund's overall results. Looking at industry weightings for this fund, software is the largest sector at 13.6%, followed by semiconductors and semiconductor equipment at 13.0%. Personal care products and its services also hold significant portions. This diversification across tech-related industries is common for IPO-focused funds. Now, let's dive into the actual investments and financial statements. This is where we see the nitty-gritty details. For the Renaissance IPO ETF, we see a breakdown of its holdings. For example, in the communication services sector, it holds Reddit Incorporated with a value of over $8 million. In the consumer discretionary sector, it has Cava Group Incorporated and Viking Holdings Limited. Moving further down, we see holdings in information technology, including CoreWeave Incorporated, Arkansas M Holdings PLC, and Astra Labs Incorporated. The value of the common stocks alone for this fund is over $116 million. On the international side, the Renaissance International IPO ETF holds companies like contemporary Amperex Technology Company Limited and Media Group Company Limited from China, and Kioxia Holdings Corp. And Kokusai Electric Corp. From Japan. The total value of its common stocks is just over $7.9 million. Here we see the statements of assets and liabilities for both funds as of the 31st of March 2026. For the Renaissance IPO ETF, its total assets are about $122.8 million, while its total liabilities are around $5.5 million, resulting in net assets of nearly $117.3 million. The net asset value Per share for this fund is about $41.89. For the Renaissance International IPO ETF, total assets are about $8.2 million, with liabilities of roughly $263,000, giving it net assets of just under $8 million. The net asset value per share for this smaller fund is about $17.72. The statements of operations show us how the funds made or lost money during the 6-month period. For the Renaissance IPO ETF, investment income was over $521,000, but due to net realized and unrealized losses on investments, the fund had a net decrease in net assets of over $23.6 million. This shows the volatility typical in IPO investments. The Renaissance International IPO ETF had much lower investment income, just over $26,000. However, its net realized and unrealized losses were significantly smaller in dollar terms, leading to a net decrease in net assets of about $229,000. This indicates that while the international fund also experienced losses, they were not as large in absolute dollar amounts as the US fund, despite being a smaller fund overall. The statements of changes in net assets show the full picture of how the net assets changed. For the Renaissance IPO ETF, the largest decrease came from net realized and unrealized appreciation and depreciation of over $23 million. This large number highlights the market's impact on these IPO investments. Similarly, for the Renaissance International IPO ETF, the operations resulted in a decrease of $229,000. However, this fund saw an increase in net assets through fund share transactions, which offset some of the operating losses. Looking at the financial highlights for the Renaissance IPO ETF, we see a total return of negative 15.37% for the 6 months ended the 31st of March 2026. This means a hypothetical $1,000 investment would have lost about $153 during this period. The ratio of net expenses to average net assets is 0.60%. This is the fund's management fee and other operating costs. The Renaissance International IPO ETF had a total return of 0.74% for the same period. This is a positive return, which is interesting given the overall market for IPOs can be volatile. Its expense ratio is 0.80%, which is higher than the US fund. This indicates that managing international IPOs might be more costly. Now, let's touch on some important notes to the financial statements. These notes often contain crucial details that expand on the numbers we've seen. For instance, they discuss security valuation and how the fair value of investments is determined. The funds follow accounting principles generally accepted in the United States. This means they follow standard rules for reporting their financial status. They also adhere to specific accounting guidelines for investment companies, which is important for understanding their operations. This section explains how they value the investments. For most securities, they rely on market prices. But for securities where market prices aren't readily available, they use a fair value determined by Renaissance Capital LLC, the advisor. This fair value process can involve some judgment. The report also breaks down investments by how their value is determined using a 3-level system. Level 1 investments are those with readily available market prices, like most stocks. For both funds, all their investments fall into this Level 1 category as of the 31st of March 2026. This is a good sign as it means their valuations are based on active market prices, not subjective estimates. Dividend income is recorded when a stock goes ex-dividend, meaning you have to own it before that date to get the dividend. Interest income, if any, is recorded as it's earned. This part explains how the investment advisor, Renaissance Capital LLC, gets paid. They charge a management fee based on a percentage of the fund's average daily net assets. The Renaissance IPO ETF pays 0.60% per year, and the Renaissance International IPO ETF pays 0.80%. These fees are essentially the operating costs of running the fund. Something significant happened in November 2025. The Board of Trustees reviewed and approved the continuance of the investment advisory agreement for another year. They looked at the services provided, the investment performance, the fees charged compared to similar funds, and the advisor's profitability. The board reviewed the services the advisor provides, like managing the fund's investments and ensuring they stick to their objectives. They were satisfied with the quality of these services. They also looked at how well the funds performed. For both funds, the board noted they closely tracked their respective indexes. This means the funds did a good job of mirroring the performance of the market segment they are designed to follow, which is a key goal for an exchange-traded fund or ETF. The board also compared the fees charged by the advisor to those of similar funds. They concluded that the fees were comparable, especially considering the specialized nature of IPO-focused funds. After considering all these factors, the board unanimously agreed to continue the investment advisory agreement for another year. This signifies confidence in the advisor's management. Finally, the report includes statements about the registrant's disclosure controls and procedures. Essentially, management has concluded that the company has reasonable systems in place to ensure that important information is properly recorded and reported in filings like this one. They also stated there were no significant changes to their internal financial reporting controls during this period. So, what does all this mean? The Renaissance IPO ETF experienced a notable drawdown in its net assets, which is common for funds focused on new public companies given their inherent volatility. However, it did show strong performance in navigating its benchmark index. The international fund, while smaller, showed a positive return for the period, and importantly, its valuations are based on readily available market prices. Reducing subjective risk. The continued approval of the advisory agreement by the board is a sign of confidence in the management. The key takeaway is that while IPO investing can be risky, these funds appear to be managed with a clear strategy and transparent reporting. The risk I am watching is the inherent volatility of IPO markets and how these funds navigate future market swings. Alright, that is our breakdown of this filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.